Sri Lanka's economy continues to navigate the delicate balance between bringing inflation under control and supporting a sustained recovery. Following a surprise 100 basis point interest rate hike in May, the central bank says inflation remains broadly on the path it had projected. The bank says future policy decisions will depend on whether inflation begins to move significantly away from that expected trajectory.
Sri Lanka's economic recovery has entered a phase where policymakers are carefully weighing price stability against growth. After years of economic disruption, inflation remains an important challenge, with higher energy costs adding to price pressures. The central bank had anticipated inflation would move towards around 7%, and that expectation played a key role in its decision to tighten monetary policy. In May, the bank raised interest rates by 100 basis points, its first increase in more than 3 years.
If I may explain the basis for the tightening, I think before last cycle we did not change. Before the cycle, there we saw this inflation was going to go in the short term close to 7, no, little above 7%. That was our projection. That has now been realized. That was not unexpected. This was not unexpected. The current inflation. This is the very reason why we tightened 2 cycles ago.
The important question now is whether this rise in inflation remains temporary or develops into a more persistent trend. Sri Lanka's policymakers are expecting price pressures to eventually ease as the country moves through its current transition. That outlook is also shaping how the country approaches monetary policy, with the impact of earlier decisions expected to unfold gradually rather than immediately.
That's why we usually normal increments are 25 basis points, 50 basis points, but knowing that this was going to happen, raised by 100 basis points at that cycle when you saw it. And what we see now, we don't see any undue kind of deviation from the path we saw at that point. If you look at our fan chart, the projection based on indication of where inflation would be, obviously even that point we predicted inflation would be going to touch the upper bound, and then after that it will taper down and disappear the impact over the kind of a transition period, horizon of the transition period.
The next few months will be important in determining how inflation works. According to the policymakers, any further change in interest rates will depend on whether inflation starts moving away from the expected path.
Any decision going forward for us to tighten or loosen will be based on whether we are going to see realizing a deviated path from what is initially expected. So far we are not seeing that. One thing, because of the proactive action, and as we all know, when you take a multiple decision, full impact will be felt after some time. That's a transition lag. Maybe 12 to 18 months is a full impact will be felt.
From Sri Lanka, the inflation story is therefore not only about today's prices, but about where prices are headed next. With the economy still on a recovery path, the challenge will be to contain inflation without undermining that recovery. For now, the outlook remains one of cautious optimism, with price stability continuing to be a key test for Sri Lanka's economic recovery.